Good morning, Quasar Markets Live. You've got your main man, Howard Greenberg, here to bring you through the day. Our main man, BigBeat, is on the road today, traveling for business. So he'll be joining in a little bit by giving me some information today that we're going to talk a little bit about. Markets are getting ready to open here in about a half hour, as we know so far overnight. Let's bring up our screen here. And if we look, SPX so far trading right around 56.62 when we closed last night. But we are seeing we're down about a full percentage point here as we get ready to open, again, or as we get ready for the cash markets. Down around 559 here. So I want to point it out because that's going to bring us to what I think is a key level on the SPX here. We're going to start off today. I do want to point out a couple of things. The first thing that I want to point out is after talking to BigBeat, we've been mentioning, he's been pretty optimistic, pretty bullish in general. I asked him today because I know two of his favorite companies did not have overwhelmingly great guidance in their earnings reports we just went through. So I think that's maybe where we actually lead today. So we're going to start off a little bit with FedEx. And FedEx did lower their guidance here. They are down. Let me pull up the chart. And grab my notes on their earnings here. But basically, FedEx reported weaker than expected fiscal outlook. As we can see, they're down 10% between the close last night and today. So a pretty big drop here. You're talking all the way down at this 223. I actually have to do a little slide pull here to get it to come back in. So you're looking at FedEx opening up at a level we haven't seen since June of 2023. With that in mind, that has BigBeat a little cautious these days. So again, he is still long NVIDIA. That was pretty much the only position he has been holding there. But in general, he is, sort of just wanting everybody, be cautious here. We are maybe entering a little bit further of a bearish area. The tariffs, everything, uncertainty, the war in Ukraine not moving, nothing sort of moving has us, like I said, and he uses FedEx, as he's talked about, as a channel check. They provide so many services. It's like I love to take a look at some of the credit card companies because they get insight into so many areas, right? When we use our credit cards, we're sharing that information, that where were we shopping, how much are we spending, when was it done? All that stuff is captured, of course, that data by Visa, MasterCard, companies like that. And you're able to get a good channel check into what's happening because they break down by sectors, by, the time of the year, seasonality, things that are good. FedEx is another good way to sort of take a look at that. So not really good there with their earnings. To pull up their stuff, they reduced their profit forecast. That's the big thing that's got everybody up in arms. They now have an EPS forecast of between $18 and $18.60. And I will keep in mind what I've noticed in these earnings reports. If you change your guidance and the entire range of your guidance goes below the former low end of the estimates, it's just tanking the stocks right now with good reason, right? So their previous estimates have been $19 to $20. So again, about $1, in difference there to $1 to $2. Their third quarter performance, they did report a 2% year-over-year revenue increase. So that's good to see there. But again, it missed Wall Street's expectations. They were looking at 456 in EPS, and it rose from 386 last year to 451 this year, but again, not hitting expectations. More important. Why is that important? For some of you that might say, well, what does that matter? I just look over here at TradingView and I see if there's a green one that says they had a beat or a red one that they had a loss. Why do I want to look at all of this? Why is it not such a big deal that they moved up from 386 to 451? Why is it still going down? That's a good move versus last year. Keep in mind, these things trade at, pretty big valuations of forward earnings. So if we take a look at the financials on FedEx to tell you what I'm talking about here, we see their price to earnings ratio is about 15.75. So basically their stock price right now, it's going to take 15.75 in their current profitability to equal that valuation. And, you know, as those things move, it matters. And that's why if you don't hit even the estimation, not necessarily where you were last year, you can see these big drops. We have seen some immediate analyst reactions to this. I saw two of them so far. Evercore's ISI analyst, John Chappell, reduced the price target from 290 to 276 here. So again, you know, it's down at 223 right now, so well below that. And then Loop Capital downgraded FedEx to a sell from a hold, citing concerns over potential recession impacts and trade uncertainties affecting profit margins. So, you know, and as I mentioned, FedEx's performance is often viewed as a bellwether for the global economy. The company's challenges, including a sluggish industrial sector and trade uncertainties, may signal broader economic headwinds. So again, I wanted to point that out. It's one of those companies that we like to take a look at here at Quasar, and make sure that, you know, it's a channel check for everybody else. So that one is one of the ones that is negative. The other big one that is a favorite of Steve's and mine, Nike. And Nike did have, again, an earnings beat, but are down almost a little over 10%, quite frankly, between yesterday and today. Pre-bell trading at 65.88 here. And again, as we start to zone out to the left, right, we always look to the left and zone out to see what's going on. It gets a little difficult here with Nike. You got to use a weekly chart. To take a look again. And now you're going back. Well, they did have that crash. Nope, it didn't make it anywhere near there. So you're talking about Nike opening up at 65.85. We haven't seen that price since COVID, since March 9th of 2020. So keep that in mind. You know, these are some, again, if we look at what they're now, whoops, wrong one. And I'll point out with Nike, they had a beat on their EPS and a beat on top line revenue, down 10%. And again, we see their price to earnings ratio, similar level, 22.55 right now. You know, keep in mind too, Nike pays a 2.19% dividend. And again, their earnings per share are about $3.25. So with that being said, you know, Nike, again, definitely struggling. And if I look at their numbers here, sorry about this. I just went on by myself, no one else to fill in this talk, so it takes a little second here. Here is Nike. And they warned that their sales could weaken under the company's turnaround plan with new tariffs adding to uncertainty. Nike CFO Matt Friend told investors that its current quarter sales are expected to drop by a percentage in the low end of the mid-teen range. So again, you know, a double-digit drop in sales, according to an earnings call transcript provided by Alpha Sons. Excuse me, not really bad there. So again, I don't know why. Oh, there it is. That's why, because it's right here. I'm like, why does it not have my information? So what they pointed out, and again, key numbers there, their quarter three sales were down 9% year over year. And then their EPS came in at a beat versus the expectations, but again, well below last year's numbers. They said that the new U.S. tariffs, global geopolitical instability, currency exchange pressures, and overexposure to older casual sneaker lines, specifically some of my favorites, the Air Force One, the Dunks, and the Air Jordan ones. There. So an interesting thing. What is their strategy moving forward here? They're looking to liquidate their old inventory to make room for new athletic focused products. We know that's why BigBeat was a big fan of Nike in general. Money Mitch, what's going on, man? How are you doing? I'm with you. XLF, financial sector for sure is definitely what we're going to take a look at today. And everyone if anyone doesn't know, you got to follow Money Mitch _TTP. The man is a legend in the trading field, so make sure you're keeping an eye on him and Trade the Pool. Great show. If you're not here watching Quasar, make sure you're watching those guys, and we do try to put them on here a lot, so we love those guys. What Steve really liked about Nike is that they're focusing now on the athletic focused products, refocusing stores and online on premium destinations. We heard that yesterday too, right? From other earnings. That was from the folks over at K Jewelers Signet, the parent company of K, and they're talked about how they're getting away from malls. They're getting into standalone stores in better locations, doing it. So I think it's the right move. They're going to focus Nike here more on getting back to their core athletic, footprint. What I like is I'm going to buy some Air Jordans personally at a discount here if they're going on sale, and Air Force Ones. I'm an old school guy. I love both of those, so I can't wait. So we'll keep an eye there. Getting back a little bit into what we're going to keep an eye on today. Like I said, I'm watching the SPY here as sort of the bellwether for what is going on in general at a bigger sector. And, a couple things that I've been keeping an eye on or want to focus on is really just, number one, this 200-day moving average. We need to regain this to see, in my personal opinion, some bullishness come back to the market in a nicer way. It's going to take that. I come from the world of crypto, as everybody knows, and on Bitcoin for so long, the bellwether has been the 200-day MA. And, that doesn't come from crypto. That comes from the charts. It doesn't matter if we're charting tulips, crypto, gold, or, NVIDIA. These things don't lie. We're looking at price action. And you can see we've got to get back here, and you can see with the price action, it was support back here in October. It was support the level that the 200's at right now back in October, and it was our resistance here in August. So, to me, it's a big zone. We flipped what was resistance into now support on multiple levels. But when we fell through it now, it looks like what? It looks like as of right now, it's moving back into the resistance side, right? We're moving back into resistance here. So for me, at just a sort of basic 50,000 foot level, what I want to see is that recovery of the SPY over the 200 as sort of the bellwether of what we're looking at. Overnight, European markets, everything sort of declined. So I'll pull those up for us here. You can see the stocks down 83 basis points. China got drilled again last night. We know that yesterday, Baba, Baidu, Billy, JD, all of those names were beat up yesterday. So getting beat up again overnight, and the Nikkei down almost a full percentage point here also. So world markets definitely in issues. I will point out today there is a huge amount of expirations on the S&P. I'm sorry, I got to pull up. I actually closed that out. I had that saved here. I apologize. Give me 1 second to pull it up. Yeah, we got $4.5 billion. $4.5 trillion set to expire today. And majority of that are puts on the S&P 500. The max pain point would currently be 580. For those that don't know, the max pain is sort of the level where the most options are trading and where the most money would change hands, so to speak. And in this case, where the most options would expire either worthless or in the money is what we call the max pain point. So the SPY again, and you're talking 580. And we're getting set to open at 558. So those puts, some of those are going to finish well into the money here. So will we see short covering? Can we see that today? Absolutely we can. Could see an explosive move to the upside on that type of covering. Keep in mind, I would be selling into that if I'm in a position personally, because I do think once those zero DTs clear out in that first 20, 30 minutes of the day, right, that's when we see that volatility. You're going to want to be careful with that. So it's definitely the one that I'm keeping an eye on here. no economic data really coming out today, so nothing there that could really change the needle. We do know tweets out of the White House obviously can change it for sure. And again, most of the talk tariff. We do have, the only thing I have coming today is oil and gas. The weekly Baker Hughes domestic oil and gas rig count is scheduled. We know BigBeat, big fan of this, right? Because it tells you what's going on. Is it make sense for the oil and gas companies to pump, or are they just capping it off right now and holding their rig counts where they're at, or even going down in them? We've seen a decrease in them recently. And again, they base that almost 100% based on price. When they think that, price is in their favor, they uncap them and start drilling some oil. What else do we see so far? Tick, we are about 15 minutes away. Advanced declines down about 1,500. Here, Tick's down 300. So far, not starting out that well. Going back to what our man Money Mitch said, let's take a look at a couple of the spider funds here. He said he's looking at XLF. We know that's, the financials right now opening up down about 80 basis points. And again, why would he be doing that? Why would Money Mitch say that? And we talk about it all the time on the XLF and in general, right? What moves first? Money moves first. We got Steve Flanagan coming in, our FX expert, 40 years at JP Morgan, leading their electronically traded currency department. And you can see we're right in the between. We're literally at the midpoint of his zone that he said to keep an eye on. We bounced back from those lows on the Dixie the other day at 103.40. We've made a couple of runs up above 104, but so far unable to hold that. So we'll find out if he thinks that's the key. And I will point out some of the issues we're facing and that have been pointed out. Again, Nike pointed it out in their earnings, and I think FedEx also, is the disparity in currency rates right now, and the uncertainty in currency rates has a lot of these companies also worried. So not surprised to see that at all. And as I said, DXY up a little bit, but no big moves here right now. And I'm not sure of any central banks. I think they finished up with Bank of Japan, Bank of England, and the Fed. There might have been a couple that I missed there, but we'll follow up with Mr. Flanagan here at 10 o'clock on that. I will say 10-year got back above 4.2 here. We were slightly below it the other day, but we are back above that 4.2 level to me. And again, I'm just an easy guy to please. I'm watching that 200-day MA, and here I want to stay below it, right? I want the Fed rates to come down. That would give some breathing rooms to the market. It means people have more money, hopefully, to spend. So I am hoping, well, we don't like to use the word hope here, right? Because we don't trade based on hope. But as an indicator, I can hope on things, I guess. As an indicator for what's going on in the markets, I want to see that 10-year come back down towards this 4.123 area to feel like that, the market is pricing in the Fed's next move to the downside on rates. 30-year is still above the 200-day. Trading at 454. So again, I want to see that come down. We were at 4.2. We saw even a low in December here, back at 4.3.5 or so. We need to get back to some of those to see that, work to our favor. The industrial sector, again, that Money Mitch has pointed out, I couldn't agree more. So important here for this to get back over that 200-day MA. It's going to sound like a broken record today, people, on a lot of things, because that's what we're battling, is the 200-day MA on so many stocks, so many different things. And they are really a bellwether to whether people feel we're in a bearish or bullish, market. And I think that's important because I do have it here. Analysts always emphasize the importance of that 200-day MA as the line in the sand. So, if we can breach that level, we could, get ourselves in the right way. We can move upside above it on some of these. It could give us exactly what we said. So, with that being said, Bitcoin's dropped overnight also, 83,743. It made the explosive move I was looking for when it broke that level out of the ascending triangle at 84,365. but it's pulled right back into it. And what we can actually see is it's right back into the triangle. So we got a false breakout read. I mean, with that being said, it moved up to, 87 and change from 83. So I think anybody that traded that would be happy with it. But I was trying to look, or did think that we might. Oh, I don't want to do that. I just want to delete these. Sorry, give me 1 second here. And I'll point out the levels here that I'm looking at on Bitcoin right now is, let's pull this across, make it nice and big. Let's adjust our triangle a little bit. So, you can see we've had to extend the triangle out a little bit. My key thing is we've still been in what is a pretty tight range for Bitcoin in general, outside of that break to the upside and this break back, March 10th to the downside. Outside of those two, we've really traded in between 81 and 84, which is a pretty damn tight range when it comes to Bitcoin there. Yeah, Mr. Flanagan, we got Triple Witching Friday. We're going to have you in at 10 to talk all about it, of course. And as I mentioned, 4.5 trillion in expiries hitting today. I'd have to ask you, though, when you come in, though, does triple witching matter as much anymore with all the zero? In the old days when we, weeklies were all we had, weeklies, monthlies, quarterlies, all those things, and meant more. I do wonder if, especially with so much of it being geared on the SPX or the SPY or the, NASDAQ, where they trade daily, options now, does it have as much? We'll find out today. I mean, we definitely have it set up, right? The powder keg is ready to go, so to speak, in the fact that we have all of these getting ready to expire today. So we'll see if it happens, because what I've seen a lot of times in crypto, again, they'll call out these expiries as being a big deal, and then they can lead to less volatility. I think today, though, as you're saying, and as you always talk about, a lot of people are lined up on one side. So Newman, you're coming in there. Triple witching seems to be a little bit more muted. Yeah, that's what I'm saying. I wonder, it's one of those things. I don't think we're quite there yet. I think we got to watch over the next few months how these zero DTEs, and I know zero DTEs have been there for a while, but what we've seen now more today is the fact that those expiries, the increase in zero DTEs. I mean, we hit all-time records on Monday of last week. They've become such a bigger part of the market that I think they do mute out the others a little bit. So that's what we'll see. I also think there's been a big move, as BigBeat's talked about, to futures. A lot of people, because they don't have the same patent, daily patent trading rules, a lot of people switching to futures there have changed a little bit with that. So we'll see as we get to the open. Again, we'll keep our eye on the tick down 300, advanced decline down 1500. I will warn that advanced decline down 1500, if, the stocks that don't trade in the post, and pre-market hours open up to the positive, that will quickly go to zero, or it will quickly go down to the negative 3,500 level. So that's what we're going to want to keep an eye on. I do feel a little bearish today, but what I'm going to tell you is I am going to watch for the squeeze. I think what I would say is my short-term day look right here, if I'm trading daily, if I'm doing some day trading here this morning, I would be looking at it as maybe keep an eye for the squeeze. If I'm looking here for a swing trade, I'd let it play out a little bit. That's, I think, where I'm looking at personally, and again, I'll wait for the cash market to open. And usually I wait for the first 20 minutes to get by before I look for swing trades or things like that. So that's how I'm going to play it today personally. And that's what I'm looking at. I'll also probably, quite honestly, be pretty neutral going into this weekend. I think there's too much news media events that can happen over the weekends right now. If I'm, it keeps me out of the swing games over the weekend. So today might be kind of quiet for me. We'll point out, we'll keep a look on volume too. We saw volume actually kept up pretty well yesterday, considering the first day of the NCAA tournament. We usually do see a down, a fall in volume. Qs held up pretty well. SPY held up pretty well too. So we saw volume hold up throughout the day. Question is it going to be around today, or do we see everybody do their trading before noon and then see it drop off? I didn't look at it by the hourly. Let's do that right here. Bring up my hourly chart here on the spot. I will have to add volume back into it. Yeah, and it did sort of die out here, it looks like, towards the afternoon. We got a spikes in the morning, spikes on the last hour of the day, and then it was pretty muted. So we'll keep an eye on it for sure, see what's going on. VIX has climbed back up about 6%, 21.14. That's got me a little bit on edge also. We're unable to break, to the downside like we wanted to. We didn't even really challenge that 1934 level that I have here on my hourly as the key spot. We challenged it briefly at the open yesterday, and then we just melted our way to the upside on the VIX. So I'm going to be keeping an eye there. We're less than 5 minutes to the open, and again, we're still moving down, tick minus 32. Let's take a look at the Mag 7. Right now, you got NVIDIA set to open up at about 116.21. Again, everybody sort of knows my zones here. I've been watching that. I feel like we're, trending to trade in between this 110 and 120 area so far. Haven't been able to break out since that drop here on the end of February. I don't think we're anywhere that's going to do that right now. So we'll be keeping an eye on it overall. So I just want to change around some of my banners here. And please do a favor, help us reach more traders. Hit the like button, hit the follow button, comment, share. All those fun things really do help us out. They don't cost you anything to do them but a few seconds, but they help us get to more viewers, help us bring you better educators, help us make you a better trader. So please do that for us. It really does help. There. Apple set, again, also down about 1.66% here so far, getting ready to open up near that 210 spot. So to me, that round number 210 is going to be the area to keep an eye on. If we can stay above that, have a chance to move back up. Anything below 210, though, opens up downside. Personally, I'd be looking, downside 207 for the first spot. But quite honestly, you can see we didn't spend a lot of time in that area when we look left. When we move, and again, what I'll point out here is I'm just talking some simple basics that come in charting. And you can see in this area here, we went up and we came down and then back up in, no time. We don't spend much time trading in between that, 195 and 207 mark with Apple. Once it finally broke through 200, which you can see it struggled with a few times back in 2023, it didn't look back. It shot right up to that 220 level. It did retrace, tested the that level, and then it took off again. And this is the first time we're seeing a retracement here to those levels since August of 2024. So again, these are important areas to watch. A fall below that, there isn't enough price action. You could see an explosive move to the downside there, but keep an eye. Microsoft down 1% here, 382. This one's in a nice little spot, in my opinion, though, that you could, again, on any short cover in here, you got nice room up to that 400 level. So some of them have better setups than others here based upon what happens this morning. Again, Google, it's swiped down into this liquidity zone, is trying to build off the bottom of the liquidity zone. The problem is that your asymmetrical trade is what you want to set up here. For me, I can see it, what I'd be looking at here if I'm looking to the upside. A drop below that 161 area and look out below, so to speak. So that'd be my stop loss, anything down below that from this 163 it's trading at. But you got nice room up to 170 in the top of that liquidity zone. I don't know that we break out of that liquidity zone here. That was, again, the key resistance in August of 2024. But that would set you up for a decent trade to the upside. We are 1 minute away from the open here. I'm going to get us on the cues. It tends to be what I watch here this morning. Pull up the minute chart here. Do want to take a quick look at tweets, see if anything's hitting the news. Musk just arrived at the Pentagon for meetings with senior military leadership. So again, tweets out of the White House I don't think are going to help us today. Fed Williams, it's key to think about the longer term impact of government policy changes. They are assessing tariff impacts, and it depends on a lot of details. We are open. Oof, tick negative 600 here for the first seconds. So moving to the downside here on the tick, trying to bounce back a little bit, but negative 600. And like I said, wow, advanced decline. That's not good to see. Down 41.75. So first moves are a sell-off here across the board. We see the SPY opens up at 559 under that 560 level we talked about, and it is now down 1% on the day, trying to hold steady though so far. Want to see a breakthrough VWAP at least on this short-term 1 minute chart to give me some thoughts that maybe we got some buyers stepping in here. You know, this is the charts I watch for the first 20 minutes. For those that don't know, I tend to stick to a 1 minute chart on the VWAP. I tend to stay towards QQQ, the SPY, and then individual mags to get a better guide for what I feel like the market is starting to do. Trying to get back. There you go. 560. That's, like I said, my line in the sand. I want to get above that, stay above that today. Qs are making a little bit of a better move here again, but again, rejected right at that VWAP so far. So far, there's no short covering from what I'm seeing, zero DTEs. Those traders that are playing those games are usually doing that on, you know, naked calls and puts off of this VWAP. So the bears do so far have control of the market still. Tick negative 545. Advanced declines move negative 4,200 here. Dow Jones now down 1.03% at 41,521 towards the lows of the day so far. SPY now down 1.15, 1.17. Oof, moving to the downside. Qs moving to the downside. If we break below this one standard deviation on my VWAP chart, I start to get definitely bearish here to start off with. Bitcoin 83,500. So again, it's not making the move up either. We're not seeing the flight into crypto, not seeing the flight into gold either. Gold. So we're just seeing a market sell-off here. This is where I start to go, okay, maybe we can get something moving here, because if everybody's just irrationally selling, you know, at some point the institutions tend to look at that and say, let's see what we can do from here. Let's take a look at the spider indices here. They got to all be, they're all open up negative. If we were listening to Money Mitch here and we're taking a look at XLF, down about 66 basis points here. It is one that is trying to challenge VWAP on at least the last 4 occasions here. So it's one trying to make a move. Could give us a little bit of a move. XLI, he talked about, down 1.16. So I think everything's telling the same story that I can see so far. Tick down 562. Treasury yields are dipping as bonds attract buyers in mid-risk off mood. And I guess that's where I'm at. I'm a little bit risk off. I'm not as bearish on the market, but I'm a little risk off right now. I want to have money on the sidelines. I do think there's some setups that are coming around that I think could provide some good opportunities here. So I think that would be the best way to sum up my personal investing philosophy right now, is a little risk off, because I want to have a little cash on hand more than normal, to be able to jump in here maybe on some of these, like a FedEx down 11% here, biggest drop since September. So let's keep an eye here. FedEx, what's going on there? Okay, it's trying to recover a little bit, trying to get up towards that 221, 222 area, but man, that is low. 220.16. And I would quite honestly say you drop below that 214, you've got more downside. Just looking at price action here, down to 205, even the 200 level. So, you know, so far holding up, trying to go positive, you know, above that 220 line, but so far not able to do it. What else do we have going on here? Big movers and shakers. Let's take a look here. I'm going to have to switch this over. It was on. So let's talk about some winners. I'm going to take this down a little bit. I'm going to stick to the S&P 500, the NASDAQ 1000. We do have some winners. So on the uncertainty here, looks like Lockheed Martin LMT up about 2.84% so far today. Tesla is up 2% here. So they are one of the winners so far. SMCI up 1.51. SIBO, there you go. The SIBO Global Markets up 1.48. Progressive Insurance up 1.21. Some of the insurance companies get a little bit of love here, Progressive and Erie. So that's good to see. Let's take a look on the downside. And we can see a lot more to the downside with bigger moves. FedEx, the big loser so far, down about 11%. Micron, I didn't really talk about their earnings and what's going on there. Let's pull up that information. And I do have a ticker for that. I thought I did. There it is. Okay, so for Micron here, earnings performance reported an adjusted earnings per share of $1.56. It surpassed Wall Street's estimates of $1.43. Revenue is up 38% year over year, reached $8 billion. So, it was everything here sounds pretty good. Not the price reaction to it, though, down 8% now. Sales of high bandwidth memory, their HBM chips, essential for AI processors like those from NVIDIA, exceeded 1 billion in the second quarter, a 50% sequential increase. Company raised its 2025 market forecast for HBM to over 35 billion from a former estimate of 20 billion. And the analysts liked it. So Weedbush analyst Matt Bryson raised the target from 125 to 130. And UBS analyst Tim Arcuri maintained a buy rating with a 130 price target. And he highlighted Micron's technology leadership in that HBM and its positive impact on DRA or DRAM supply demand dynamics. DRAM is a sort of chip. So definitely, good news. Market not liking it here. So, again, Micron could start to give you an opportunity here if you are looking for a value stock and you feel that maybe the market's mispricing this. So, keep in mind, while I am, like I said, a little risk off, a little bearish here, I am looking for value where it is. Do see a couple of things moving to the upside. TERN, Turn, which is Turn Pharmaceutical, up 10.51 here. I will mention this is a small cap pumper. They only have a $295 million market cap, but they are up 10.5% here. Tesla doing nice here, 239.75. So making a move back up here. Why does this one keep on going out of? Because I keep hitting the wrong number, the wrong thing. There we go. But a nice little move up by Tesla here. Regain that 239.10 spot. So if it can hold above that, I do think it's got room upside 264 here. So Tesla trying to make a move. It's a tough one, though. Another one winning today, VinFast. They were up yesterday, also VinFast originally, or excuse me, they were up Wednesday. They took they retraced almost all of it yesterday. I didn't notice that. They had been up after Carvana's upgrade, quite honestly. Let's take a look at the indices here. And so far, tick still negative 330, advanced decline, only down 4,000 now. So we've seen about a 10% move to the upside there. But Dow Jones still down almost a full percentage point, not near the lows of the day, starting to move off of those lows of the day. SPY down 1.15. Most of these things are moving back towards the midpoint of their trading range so far this morning. So we are seeing a little bit of momentum seep back into the market. Turkish President Erdogan, we will not allow public order to be damaged. Turkish President, we will not give in to vandalism or street terrorism. We'll see there. I think that's part of my, that's another powder keg ready to blow here is Turkey right now. I do see that the UAE is committing to 10-year, $1.4 trillion investment framework in the U.S. after the Trump meeting, say White House officials. So that's a big one. That's a bullish news there. So I like to see that. UAE here with, again, over $1 trillion in investment. Just seeing what else is popping up here on all of this. Seeing that Edward Jones, CEO, says now may be time to buy the dip, but for stocks, not crypto. I don't argue that. I don't argue that. I think crypto, we still get some more downside. We could definitely see, I could see us testing that 78,000 area for sure on Bitcoin if we get a little bit of sell pressure against us there. Tick still negative, but trying to go at least neutral here. And so far, it's moving to the upside. But again, to get to neutral is basically around there. So we are seeing the tick start to tick up from the lows of the day. That happened right at the cash open. So we are seeing some stuff come in. Maybe we are getting a little bit of that short cover in here. Let's see if it's happening on the mag. Seeing Tesla move up, so that could definitely be some short covering there. Wouldn't surprise me at all. I did not necessarily look at their option chain to see what was catching my eye. Let's see if there's any other pumpers moving here this morning. Again, FedEx, Nike, Micron, Lennar, which had earnings yesterday, Marriott, which had earnings. So everything that had an earnings report moving down. Carnival moving down. I don't believe they had earnings this week, did they? No, they had earnings already, so I don't know what has Carnival. Oh, that is earnings based, sorry. They had a beat. We'll see what's going on there. Can't go quite positive, but now we are less than $4,000 on the 4,000 on the negative on the advanced decline, so that's good to see. Bitcoin regained 83.5. Gold is the one that's dropping down, almost down a full percentage point here. So gold dropping down here. Not really sure what's going on with that. Although first place I would look, as I'm trained by Mr. Flanagan, would be to the DXY here. It's not getting above that 104. It is a little elevated compared to where it has been, but not breaking above 104. So not really seeing a big move there that would have the sell-off here coming across. Oil here down a little bit too. Although that's right about where Steve said it should be, in that 68, 69 range for WTI, right at 67, 63. We do see the 10-year and the 30-year moving a little bit to the downside. Again, all 11 sectors of the spider are all on the downside. XLE, let's keep an eye. Again, XLF, though, is moving back up a little bit. It was down a full percentage point, so now moving back to the upside a little bit here, 49.39. As we know, our boys from Trade the Pull saying they're keeping an eye on that this morning to see where the direction of the market's going. That being said, let's take a look at banks. JP Morgan down about 40 basis points. Bank of America down about a half a percentage point. Do see Morgan Stanley, Goldman Sachs down again. They were up the last 2 days, so they're seeing a little bit of a pullback here. Again, that's expected. They had nice runs here. Both Morgan Stanley and Goldman Sachs had made nice runs here. You can see Goldman Sachs had bottomed out in that 520 area, now up at 556, had gotten as high as 567. So almost a 10% move to the upside there. Japanese bank MUFG with a nice 4% move to the upside here. That's it. And set a new all-time high at 1493 today. So seeing a little bit of run by foreign banks here. Let's take a look at the chip sector. That's where we're getting beat down a little bit after Micron's earnings did not impress the markets for some reason. They're down 7%. NVIDIA down 2%. Broadband down 1.4%. TSM down 1.65%. ASML down 2.54%. So all the chip companies sort of getting hit here on that news. Crypto stocks all down in general outside of Galaxy Digital's up 2.54 here, but they've been on a heck of a downtrend. Restaurant stocks all to the downside too. Kava, the big loser, they were faring better than others yesterday. So last 2 days, they're pulling back. So even the strong ones seem to be pulling back here a little bit. Healthcare is pretty neutral compared to some of the others here. UNH just went positive. Steel was really beat up today too after Nucor. I should find that news here. Nucor had their earnings. And as Barron's put an article here, steel earnings are lousy. Weren't tariffs supposed to be help? And it said that many steel companies provide mid-quarter updates, and the recent updates were lousy. Nucor was the one that everyone talked about yesterday. They are America's largest steel producer, and it said it expected to earn 50 to 60 cents a share in the first quarter when Wall Street was looking for $1.06. So shares were down about 3.5% after trading hours. So they also said that lower selling prices are part of the problem for Nucor. Benchmark steel prices, however, spiked north of $900 a ton after the tariffs recently. So why would that not be the case? Doesn't look like there was a whole bunch of explanation here, which is probably why the whole sector is getting hit. But steel definitely all down here. You know, U.S. Steel doing the best, only down 24. Aluminum providers down the worst. AA, which is Alcoa, down 3.3. CENX, which is Century Aluminum, down 3.68 here. So all of them getting hit pretty hard here. Tick still negative 59. Advanced decline sticking right around that 3,900 level. So right about there. We are seeing a pushback by the Qs. They had hit lows earlier today of 470, 290, just below the 473 level. Now back above 475. So seeing a little bit of a move to the upside here now. You know, do we see a melt up here? That will be the question. It is trying to challenge where we got to right at the 930 open here. So we are challenging VWAP here. Let's see if we can break to the upside. Let's see if we can cause some short covering here as we get, you know, the algos are sort of played it out. There's about 3 more minutes, in my opinion. The algos, I think, fight it all out in that first 20 minutes, and then it tends to be traders. So far as we can look at the VWAP here, it's been a definite zone of resistance here that it's unable to sort of break through and hold above. That's what we want to see is the first line of tech coming back. SPY's down 1.08. And we see pretty much in the same situation, unable to hold above VWAP so far and moving to the downside there. Just trying to see if anything else is hitting the tweet deck here. Not really anything else that I am seeing hit the market. Come on, SPY, break that 560. Let's get this market moving to the upside this morning. It's always a little bit more fun when things are moving up. QQ trying to use VWAP, so nicely using VWAP here. I do think if you can get a move over there, it goes over 475.40, which it's trying at right now. We should see a move up to this 476.26 here. If we can get just one little pump of all, there it goes. Come on, give us that volume. There it goes. Come on, get us to that 476.27 there. Come on, Qs. Let's lead the way. Take a look at the indices. Let's take a look at XLF and see what it's doing today. That one made the nice move right on the open through VWAP, but it is retracing. So again, if we're listening and using the financials as a gauge, unlike tech, which is now trying to move up, financials tried to move up on the open and have been sliding back down, sliding through VWAP. I do think a slide below 49.25 or so would leave that as definitely the downside on the banking and financial sector for sure. Tick negative 400 again. It does seem like we're sliding out here. It does seem like a little bit of a slide out. I think, you know, Qs are trying to make a move, but it's not carrying the market with it. SPY's not really even trying to make that move yet. There's declines hitting 400. Take a look at these charts and some of the Mag 7. Tesla is nicely up 2.56 above 242 here. Netflix and Meta also in the green. We do see, as Nvidia had bottomed out below 115.50, it is now moving back to the upside a little bit here. So again, though, rejected, didn't even make it all the way to VWAP. So far, not so good on these. Apple, which we know had been moving up also. Let's see here. Apple's trying. Apple's the one that's trying, in my opinion, on the so far. Definitely looking a little better here. I think a run to 214 could give you a nice little move here on Apple. Microsoft, another one. So a lot of these mags are now breaking through VWAP, trying to move to the upside. Google, same thing. Amazon looking pretty strong so far. Amazon's got to get above this 194.80 area, though. See, everything's trying to get going here. So tick, while it's still negative 400 and we're still down 41, we do see the Qs now back above 475.50, close to the highs of the day, which are 475.75. So like I said, it's trying to make a move up towards this one standard deviation. Looks like it's going to slowly climb. I don't mind a slow climb personally, so let's let it move. RUT's down about 1.05% so far. Yeah, definitely hawk, definitely some light volume here and more chop than anything else. I'm not seeing a clear direction yet. You are correct. VIX has pulled back down below 21, though. So that could give some breathing room here. And that's what I mean, is we're not getting a clear direction out of anything. Gold is back at 3,011 here, continuing to slide. We're seeing, again, the light volume, the sell-off across most everything. There isn't much holding up. Boeing looking pretty good this morning, back above 175. So if you're looking for some positivity in the market, the nice move up by Boeing over the last, 10 days has been real nice from that 147 to 175 area. So for once, we're starting to see Boeing start to move back up here. I did again target that 187.40 when it cleared this liquidity zone down at 157. So I'm still holding to that. That's what I'm looking at here. We are seeing ourselves right now still tick negative 300, advanced decline, climbing in the wrong direction. Q still moving in the right direction, though. Hit highs of the day so far at 476.08 before getting a little bit of a slight retrace here. SPY's now down less than 1% also, so starting to see some breathing room there. Same thing, Dow Jones, that was down over a percentage point, now down just below that. It's been trading more flat than anything, though, there on the Dow. RUT, same thing, moving sort of sideways here, not really much of a movement one way or the other. Bitcoin with a nice little move back up here, 83,877. It's trying to break VWAP, make a move up to that 84,000 level. So we are seeing a little bit of breathing room in some of these, but overall still negative, tick down 700. What is silver? Peter Schiff saying silver is down 60 cents. It's back below 33. I'm not sure who's selling, but I'm sure some leverage longs in the future markets got stopped out. Their loss can be your gain by the dip. I don't normally agree too much with Peter Schiff, but I don't argue with that. BigBeat's been all over getting silver for a run up to 40, so can't argue to buy the dip there. FedEx now down 11.16 here. It did hit as low as 217.22 and moving up from that level. And again, if we take a look at some of the Chinese names are down again. BABA down 1.61% here. Baidu down a percentage point. JD down 2 percentage points. NEO down 4.5%. PDD, which is Temu's parent company, down 4.75%. So again, most of them are down. Dixie back above 104 here. So the DXY, the dollar, King dollar stepping back in a little bit. We see it's gained ground against the euro and the sterling today. Pretty flat versus the yen. See what else is going. Robinhood down 1.35% here today. It had been on a nice move here once it bounced off that support at 35. I will say this is the key spot here for Robinhood. A break above 44 could be explosive to the upside, but personally, I'd probably still be in the mode to short it off of that 44 level as opposed to going long unless I can see a breakout from that level. But a breakout above that level would be bullish for sure. Tick negative 200, advanced decline, still sitting below 4,000 here, negative 42. SPY is back and the Dow back now again. They lost their momentum. As you nailed it, Hawk, it is just choppiness, choppiness, choppiness. We're not seeing a clear direction here. We're not seeing, so I guess so far those zero DTEs or the triple witching don't have us moving really one way or the other since the open. Where we were pre-market is about where we're at now would be my biggest takeaway so far. Let's take a look and see if we've got any pumpers here. I'm going to go to and look here and see over the last what. Let's look over the last. I'm going to actually wait. We're going to hold off till 10 o'clock to take. I want to change my view here. Seeing the casinos get hit a little bit here. Caesars Entertainment. So it does look like anything that's sort of disposable income companies are definitely getting hurt here. And what I mean is Marriott, Carnival, Caesars, Las Vegas Sands, Hilton, and then off a sympathy play from Nike, you see Lululemon getting hit here. And again, I'd also point out Lennar had earnings. I didn't see their results here, so let's pull up some news on Lennar. So their first earnings reports, those that don't know, Lennar is one of the home builders, one of the ones like D.R. Horton and Pulte Group, and that we keep an eye on here. So their quarterly numbers, EPS, $2.14. It did surpass the consensus of $1.74. So, but last year they did report $2.57. So again, one that might have hit that. Total revenues were $7.63 billion, which also beat consensus. But I want to see here what their forward guidance is. Their backlog at the fiscal quarter end declined 19.2% versus a year ago. So they got 13,145 homes to sell. That's not very good. They like to be under that level, and they're not building a lot of homes, so that's not a good number. Okay, we are getting close to the 10 o'clock hour, and everybody knows what that means on Monday, Wednesdays, and Friday. We have the legend himself, Mr. Stephen Flanagan, coming into the room. Let's get him in here and see what's going on. Mr. Flanagan, how you doing today?
Okay, Howard, wrapping up a week, and good morning to all the viewers. It's time to talk a little bit of FX, and one of the theories and topics I'm working on over this weekend is called market impact. And today, I know a few comments. The Hawk has said light volumes and choppy. Triple witching hour today. And I think what you're going to see today, yeah, it's quiet right now, but market impact. And how? Let me describe it this way, and then I'll write something. We'll talk a little bit more about it next week. How do you turn an ocean liner around in a lake without anybody seeing?
Right.
You can't. In the world of FX, market impact is critical to an execution. That's not really the name of the game in the equity market, although it will be transitioning to more price transparency. What do I mean? Why should I sell a stock at 37.3 when it's trading in the market at 37.8? How do you know that you are executing at the best available price in the equity market? Today, you really don't.
No.
That's something that we can discuss further
We'll
down.
talk, and we're getting into black pools or dark pools and different things that happen, and order flow payment and how things get executed and front running. I love to talk about that because we all know the solution for that, of course, is blockchain transparency and adopting the systems of trading that crypto use, where none of that can happen because everything is on chain and every order is seen, every sell limit order, every buy limit order is seen. That's what we need to get to. You and I have talked about that. We both agree that transparency is needed in the markets. I got to ask you, is King Dollar going to break through? To me, that 104 is sort of the line where I'm saying we've got King Dollar is back. I know you've got 104.47 as the real line in the sand, I believe.
Right.
But what are you seeing here, Mr. Flanagan?
Well, if I could share my screen, jump
Absolutely.
into a couple of charts here. I'd like to really begin to break down a little bit into this right now. Let's see if I'm up. I think I'm up there. Okay, here we go. So in the dollar index, I'm really watching this 103.80 level on the downside. We did talk about the level of let me see if I can get a little bit larger screen here. Howard,
that's as big as we get.
Okay, so I am talking about right now a break of around 104. I think I have that as 05 on my chart there, but
yep.
We are beginning to ebb off of this multiple lows. As you can see, 102.80 was a line in the sand. The most recent was 102.84, 80. So far, we've got a double bottom here. Specifically, look at this stochastics model. We have been sitting so long. When I itemize and talk about that, what I look for, the length of time that I'm oversold, meaning the slightest sprinkle of good news is going to turn the market.
Right.
Where are you going to go here? You've sold. You've got double lows in place. We're beginning to break. I'm looking for a break here, 104.05. In particular, 103.31. Yeah, it was last Friday's close. Why do I use last Friday's close? Because every computer model looks for a definitive level that it can establish. The closing level at 5 p.m. in New York closes the trading week for the globe in the currency market.
Right. For those that don't know, currencies trade the way the equity market is moving at 24/5.
That's right. That's right.
I did want to point that out to our viewers that don't know. Great information. So with that being said, Fed didn't cut.
Right.
We talked on Wednesday before it did. We weren't surprised.
That's right.
Powell used all the words that I think I was scared about, but the market moved up. Uncertainty. Yes. I wrote it down here. I still have it. He said he lowered his growth expectation, GDP, right? That's right. One of the mandates. Lowered his jobs number or expectations. That's another one of the mandates, right? And right. Increased what inflation is expectations are. Is that the third mandate? So what is he doing? What is he doing to fix this?
Again, he's kind of giving you a little bit of this and a little bit of that, and he's trying to drive the market right through the middle. Look at the comment out of Fed Williams today.
Sorry.
2% inflation rate target is not up for debate. Oh, I cringed when I saw that. Why? If the central banks are going to hold firm, how can they hold firm? Who's got credibility? Come on, you talked about inflation being transitory. You guys are so missing the boat, our central bankers.
Yeah, I don't know if you've seen it. Waller's speaking right now, just came out 3 seconds ago. I believe the slowed runoff pace beginning in June 2024 continues to be the right one.
Yes, they've got, how could you, well.
These guys are saying this. Do they have training? Do I have to send them access to Quasar Markets platform so they can actually look at live numbers?
Right. For the viewers here, in a historical point of view, quantitative easing never ever heard of, never tried. Quantitative tightening, never heard of, never tried. And are we supposed to take them at their word that these are successful policies? Essentially, quantitative tightening is taking money out of the market,
Yes.
money that can be used for investment. Is there any wonder that the economy is slowing down? It's the
Right.
Fed is driving this. They're too restrictive on rates. And this is not just the Fed, it's global. Let's take a look at that. Swiss
Yeah.
National
Well,
Bank
before
just
we do
cut.
that, I just want to point out that
Yep.
it showed in the earnings reports today. Both Nike and FedEx said the volatility and the inequalities in the exchange markets right now are a absolute headwind to their business.
Economic and policy uncertainty is going to drive volatility. So if you are trading today, whether it's currencies, bonds, stocks, whatever, Jack be nimble, Jack be quick. Don't get caught on the candlestick. Be quick and be decisive in your trading, because this policy uncertainty will pass. But this period of time we are in is highly volatile, especially in the world of currencies. Let me just highlight, we did talk yesterday on a little chit chat back and forth about SMB. Swiss National Bank cut interest rates to 0.25% from 0.5%. They are now the lowest of the major industrial countries, interest rates at 0.25. Why did they cut rates to 0.25%? They're combating deflationary price pressures. The same thing China is doing. The same thing Japan did for 25 years. So this is why I am so negative on our central banks. They just don't seem to see that the growing theme in the world is that deflation, not inflation, is still got a firm hold in the marketplace. And that should be more fearful than anything, because what that leads to is that word that you've heard many talking about, stagflation. But
Big B was on it before everybody else.
Yes, he was.
I'll be honest with you there. And, we're just seeing it, and I guess, what for me, where I'm going to say the positivity that I think traders should be looking at right now is value is back in the market, as some people said. I saw the CEO of Schwab was on today and talked about, in the equity market, you're starting to see valuations come down to where you want to. So, I have brought up today a few times, I'm sort of a little risk off compared to my normal portfolio mix. And it's not that I'm bearish on the market. It's that I do think that the tide is going to turn. It's going to turn quickly. And I want to have money on the sidelines ready to go.
Keeping your powder dry. That is a great, and that underscores what I'm trying to say with volatility. You are in, you are out, and then you are back on the sideline waiting for another opportunity, because the opportunities are fruitful in this environment. But to underscore my deflation, German PPI was out minus 0.2 and only 0.7% on the year. So that was expected at 1%. So Germany, the hub and the center of our European euro, is beginning to see price pressures ebbing down, not up.
Right.
You have unemployment rates in Australia today, yesterday, 4.1%, unchanged. UK, unchanged, 4.4%. And what did the UK do? They punted on lowering rates again, because they are so preoccupied, because the UK in its closed economy does not have the ability for prices to transmit throughout the economy as easily. Therefore, they are misreading the facts by saying that inflation is stubbornly high, and they refuse to cut rates, and they're growing at zero.
Right. So, and that, and I guess that's where I'd also say that's where, we've all talked about it. Tariffs don't work. The threat of tariffs to bring people to the table we thought would be more effective than they seem to be, because it just seems to be a pissing match right now. And that no one wins in that. And all you'd have to do is point to the UK, right? Is look at what you're just saying. Is because of their isolation, is that they sort of became, with the Brexit exit again, and their inability to regain the foothold as the key of European financial markets that they thought they would just default back to in London, right, is that they've seen that there's not as much market. It's a weird one to talk about, but I was, talking to some friends in the wine business yesterday, and these things are already taking big effects. And what's going on, just so people understand, when it comes to tariffs, you don't get a rebate from the U.S. government. And what I mean there is, wine importers of French wine are not bringing wine in right now. They've canceled all their orders because it's 50% more expensive right now if those tariffs go away. They can't have all this inventory at that elevated price, so they're not buying. They're literally saying, we're going to avoid the U.S. market. I was blown away to hear it, because it's not what I've seen in the past when these threats or when these things have popped up under Trump 1.
And more people going to the stores are starting to say, hey, I prefer to buy American, because I prefer—
Which I'm fine. Don't get me wrong. We have a fantastic wine industry here. California there is some of the best. But here's the runoff of that. Over the last 10 years, they've stopped their production at certain levels. They've hit certain capacities, and if you want quality level, and what will they do? Because I come from that world, they will raise their prices immediately to match the European and other prices in the market. Unfortunately, I lived through it. I worked for one of the 2 largest wine distributors in the United States at a vice president level, and that's what we did. We did it in the past, and they'll do it again. And we started the steel industry this week in aluminum.
Opportunity, though, to grow market share.
Absolutely. Well, that's what I want. I want us to give that discount. In other words, if we want that to work correctly, right? The idea should be, you should be able to buy U.S. steel, and I don't mean the company, I mean U.S. produced steel, at a discount to the Chinese steel right now. If all they do is increase the price to match, while they'll gain a little bit of market share, they'll lose in what we're trying to do here. So we need these companies. We need these companies to understand that to not look, and it's tough. You lived in this world of working for a private, publicly traded company, right? But you're beholden to the stock price today. So, it's that really tough level. I don't blame people. I'm not saying that they're price gouging, because that's not what I'm saying here. But if you're adjusting to your competitors, which is standard price market in the world, it's going to hurt what we're doing, not help what we're doing.
Right. And the currency markets are telling me that we're in this period of uncertainty where nobody is really sure. What I would tell the viewers is one major thing. If you want to follow the Fed, watch this guy Goolsby. Fed Goolsby from Chicago. This guy is he's plugged into a more modern day price market, the way things adjust immediately. He came out today and made some comments. He said that the Fed has to wait for things to clear up because there's a lot of uncertainty. Okay, that's the new buzzword, uncertainty. But let's talk about uncertainty in the macro foreign exchange. Currencies are beginning to go like this, but you're beginning to see the dollar begin to be pushed the upside because you just can't sell it any further. What that means to me, Goolsby said, markets want information fast. We've highlighted this, how markets adjust instantaneously to new data releases. But that is not realistic at the moment. Okay, we understand that. But let's talk about tariffs and this gloom and doom scenario that seems to be permeating throughout our markets. Do you realize that imports are only 11% of the United States GDP? I mean, it's not a big deal, provided there isn't retaliatory tariffs that go back and forth.
Right.
But saying that, I've highlighted and given you the data as little as today with the Canadian retail sales minus 0.6 in January. The rest of the world is going this way in growth.
Yeah, so, it's not right. Yeah.
How fast are they going to retaliate in tariffs? It's unknown. I think what's going to happen and what the currency markets are setting up, in my view, is an April breakout where we're going to see the dollar coming back and we're going to see a lot of negotiations on tariffs, which is all a incredible positive to the macro landscape.
Absolutely.
So short term, be flexible, in and out of trading, be very prudent with your risk management. Brighter days are no question ahead. That's why in the currency market, 24/7, $7.5 trillion trades in one day. That's what the markets appear to be setting up.
Right. I couldn't agree more with you. It's the time frame, like you said, is we right now tariffs are going to hurt because it's the threat of tariff, it's the scare factor, it's sentiment in general that is just negative. And as we start to see these things work out, they'll have explosive effects like they did to the downside to the upside as we make that move, which is it's inevitable. It's just a matter of understanding, playing it, and it's okay to short the market. Don't always be a perma bull. We've talked about it. It is, don't be afraid, to play the VIX. You don't have to be very technical to learn to short the market. There are instruments out there that are designed. You can short the QQQ through a fund. You can short the SPY through a fund. You can do it in a way that makes it easy. If you're worried about how do I set that up in my accounts. In fact, what is it? TQQ, is that it, right?
TQQ, yeah, TQQ and SQQ.
Yeah, are the two of the Qs. Let me just share my screen for 1 second to show you folks what I'm talking about.
You have to have an instrument to be able to short and be long and be expressing your views.
Yeah, and this would be one, TQQ, SQQ, and they have them on on individual stocks, just for people know. If you are negative, here's SQQ. If you are negative MicroStrategy, you can bet against MicroStrategy. It's MST. I don't want to give you the wrong one. Short.
The problem is when you do these, your timing has got to be pretty much bang on, because to get the full bang of that ETF, your timing has to be pretty impeccable. You can carry that trade for a little bit, but again, prudent risk management. Don't let these run away, because boy, they get pricey.
Oh yeah, they absolutely can move. I don't deal as much in the Qs. I look more at the individual stocks. I'll short, Nvidia using that instrument. I'll short MicroStrategy using that instrument. I'll short Tesla using that instrument. For me, the big one's the VIX. I know it's volatility versus, a true downside hedge, but I use it a lot also.
Right.
Mr. Flanagan, I'm going to let you take over the screen again and let you go over your stuff. Let me remove myself, put you back on the stage, and go ahead and bring us through what you got.
All right. Let me see if I can get hooked up again here. We're still working through some of my technical difficulties, I shall say. But I did have a point that I wanted to show you in the euro dollar. And let's see if this works. There it goes. Okay, beautiful. So on my euro dollar chart here, again, I'm looking at last Friday's close in particular. I have a level here of 108.75. We're presently at 108.27. And you can see again the multiple tops in here on this. We call this a double top formation. First high at 47, a higher high at 54. But now we're closing below last Friday's close. You put your candles, your Japanese candle charts up. This is going to be a very negative setup. Watch 108 as a major break. Let's jump into the sterling, a very similar thing, except sterling gives us even a better indication with Bank of England punting and not lowering rates. Tuesday's high, 09, 130.09, Wednesday, 130.11, and Thursday, 130.14. You would kind of say, hey, it's higher highs all through this week. Last Friday's close, 128.60. We're still well above that, but the formation is beginning to show toppish. Look at the stochastics beginning to turn. It's not going to take much to see a 100-point move here in sterling. I'll jump into just one last one, the dollar yen, my favorite. I traded this one for 40 plus years. You're in a descending trend line here. We have an objective of the upside of 151.50, 60. Stochastics have already turned off and the dollar yen has really begrudgingly giving us any move on the top. A 149.25 is the break point I'm watching. We're still at 148.89. We're still below that. I'm watching dollar yen carefully. I expect it to trade up to 150, 150. But if I don't start to see a little bit of price action on the upside, I'm going to get a little concerned, because the yen is a safe haven currency. In a world of unpredictability, this is one to watch. Just jumping in one last currency to show you, the dollar CAD. We're in this wedge formation right now within a 145.50 break higher, a 141.50 break lower. We're in a very tight range, and the CAD loves to range trade. However, given the recent negatives on on Canada, I am a little bit concerned. Stochastics are beginning to show some divergence in here. Recent lows down here, these lows here. A slight turn is going to punch us through this 145.5 level, and that would be a little concerning to me. So I would want to just leave you with 2 points. One, Fed Williams is not up for debate on the 2% inflation guideline. Very concerning to me that the Fed is throwing out, on my desk for 40 years has been 2 words: be flexible. If
Right.
you are not, you can have the greatest view, just a wrong timing. The Fed has to have a degree of flexibility when they look at the world, and to throw that out and say we don't is very concerning to me. And the second point, the setup I've just shown you in the currency markets, the world is short in the marketplace, and for good reason, uncertainty. Market impact. When the ocean liner starts to turn, how is it going to turn without having a maximum impact? Today's computerized trading on this move down that we've all just seen, look at the move by a day-to-day basis, and you could see how fast things turn once everybody begins to get a whiff in the air of market orders being executed. So the same will happen on the upside. We're just waiting for the right conditions to be in place and some of the veil of uncertainty to be removed.
I don't doubt that. And that is the great way to end today. So we're going to do it on those notes. Mr. Flanagan, thank you, like always, for joining us. We'll get you in on Monday, and we'll talk more about this, the Carnival cruise that Steve's on, trying to turn around in the middle of Lake Michigan. So everybody have a great day. The markets are still moving a little bit to the downside, although the Q's doing pretty well. It's tough to say, doing pretty well at down 70 basis points, but what I point out is they were down more than that in the pre-market hours. So it is actually up since we had cash market open. So it keeps me a little bit bullish here. But again, I'm going to be pretty neutral going into the end of my day. I would advise a little bit of that. We don't tell you what to buy or sell, but keep that head on the swivel. And as Mr. Flanagan says, don't get stuck on that candlestick.
There you go.